Hi and welcome to DNB Carnegie and our presentation of Svedbergs Group. My name is Markus Almerud. I'm an analyst here at the bank. There are three things that we would like to highlight with Svedbergs Group. First of all, over the past years, they have diversified sales away from Sweden. Markets outside of Sweden now accounts for 82% versus 18% in 2016. This has decreased the risk. Secondly, this has driven the margin. The group average is at 12%, the target is 15%. Roper Rhodes, one of the companies they have bought, have a 16% average with the last 12 months of 19%. Tebalux, which they bought last year, has 23% with the last 12 months of 25%. Now, we expect more acquisitions. Management spends a lot of time meeting potential targets. Markets are local and relatively fragmented, because preferences differ between countries. We have a fair value range of 53 to 70 Swedish krona. So Svedbergs Group is a producer and supplier of bathroom furniture and equipment such as wash basins, mixers, showers, heated towel rails and toilets. Its brands are highly decentralized. Some pictures on its transformation. Since 2016, it's made 4 large acquisitions, which has changed the footprint of the company. It started out with Macro Design in 2016, followed it up with Kassa, and with these 2 acquisitions, it increased its Nordic footprints. It continued with Roper Rhodes and Tebalux, and with these 2, it went out into Europe. It targets to be the leading bathroom supplier in Northern Europe, and it's grown sales by 22% per year on average, and the UK now accounts for almost half of sales. In 2016, Sweden accounted for 76% of sales, and it was 18% in 2024. We think that this change has gone under the radar in the market, and one of the reasons could be that Svedbergs Group still has one of its brand being Svedbergs. To move on with the earnings drivers, M&A is by far the main sales growth driver in the past. There has been no organic growth on average since 2016. M&A has added 21% per year. But with disposable income having recovered and large purchases lagging, we expect organic growth to accelerate going forward. With the UK and Netherlands being a larger part of the mix, we expect organic growth to be higher going forward than what we've seen historically. Roper Rhodes and Tebalux has higher margin than the average, which has driven the margin. The Swedish operations has suffered in the past from the difficult construction cycle, while also having installed a new production line in its main manufacturing facilities. These headwinds will now turn tailwinds, and we expect to come back to the margin expansion trend. A couple of words on valuation. Valuation is not aggressive. Svedbergs is trading at 9 times EV/EBIT versus the peer group's 11 times. So in summary, Svedbergs Group is a company which has diversified its operations and sales over the past 5 years. And we think this has gone under the radar in the market. This has allowed for margin expansion. We think there is more to do in the margin. It's not yet at its target on average, and we think we will see more acquisitions and continued growth in the coming years. Thank you.